This is the Bank Nifty daily charts. As you can see, a green candle formed today. Potentially reversal sign, but there's a lot going on with where the market is, so we can see what we can plan for tomorrow. But first, let me take you to what happened today. So yesterday, or rather Friday, the market closed at 37,830, and today it opened up at 38,054. Now, what we were looking at was potentially 37, 800, 900 yesterday to kind of see where it breaks, and it opened up way above this and essentially took out this zone, creating another all-time high around 38, 300 odd levels. Now, what is interesting today, like the last few days that we've been noticing, is in the option chain, the calls were written at 38,000 and 38,300. And even though the market opened up at 38,000, and this is around almost 10 o'clock. So around 10 o'clock, the market was around here. The market was around 38,250. The calls at 38,250 points, sort of in the money, had still not shifted and adjusted their positions. I'm assuming this 200 sort of point gap up sort of caught a lot of the sort of bears in the wrong side of things. Now, even we had a slightly negative delta, but we are not trading for this week. We've been trading for the 7th October. Now, straddle opened up at around 1130 or 1135, and essentially through the day, no decay came in. In fact, the straddle closed at 1144. So we're seeing higher IVs, right? IVs became higher, premiums are sort of bigger, decay is not happening as much. So it's been a tough week, right? Overall, but one of the things that our advantage, because we're not trading for this week and we're trading for the 7th, the 200 point upswing hasn't really affected our overall range, and currently we still have a range of almost 1950 odd points, so we're still relatively well covered. Obviously, the top side and no resistance is something that we're very, very careful about. We're always trying to plan to see what can potentially happen in order for us to get better clarity on everything. Overall, I think around 12:30 or so, which was just as the candles were coming lower, the calls were all written at 38,500. So what was morning 38,000 to 30 had all shifted to 38,500 and 38,300 at the money, and the puts were at 38,300. But sometime during the day, the calls had gone to around 39,000 and 38,300, and the puts, which was 38,000, had gone back to 37,500. So there was a huge potential range getting created. So one of our big concerns is, can there be a big swing over the next 1 or 2 days, upside or downside based on option chain? So this is one thing that we are a little aware of. Overall, plan for tomorrow is this. Point of concern is still this, right? Like, as long as the market stays a little flat, what was almost 1,000 points yesterday has become almost 1,100 points, right? This is the 20-day moving average here at 37,026, and the market is at 38,171. So it's almost 1,100 odd points. Um, and that's a little cause of concern. Unless the market kind of stays flat, it's good, because when it's going up so much, there's not too much consolidation period at these euphoric levels, right? Friday was one, today is one. It should continue this in order for this to catch up, or else let's see what happens. But overall, this is kind of where the trend is looking at, right? If I were to draw trend lines, this is kind of where the market's looking, right? It's got big moves every day, is creating higher highs and higher lows, and if today were to actually break it, the gap should have been covered, especially around here. Gap could have been covered, so that's also not covered. So even though on a daily chart it might look like a reversal sign, I think it's giving mixed signals, right? Slightly reversal sign, but it's unable to cover gaps, unable to kind of have that selling pressure. If we were to look at the charts today, if you look at around this level, right, the 38,100 odd levels, you can see that the market move came, didn't close the gap, and has essentially been taking support. Now, this has been happening for this day around the 37 700 levels and 37 500 odd levels, so around here, right? If you see this, you can see if we draw this, this is a support around 410. We can see how the market's moving here. Once it's reaching 700 and crossing 700, you can see how 700 is around here. You can see how the market's taking support, moving, taking support, moving up, taking support, and it's even though we don't have a proper zone here, this is something that I'd like to mark just to keep an eye out to see what potentially can happen over the next few days. But again, like how we've been playing through the week, we're keeping our positions open. We're not really saying, okay, just because we are slightly delta negative, we don't adjust. Um, Today was one of those days where we made some adjustments but didn't tinker around too much because we were waiting for a big swing and continuation to kick in. So around 38 300 odd levels, if it breaks and then starts moving upwards, then I think we're good. Because if I go back to daily charts, this is the box pattern that we've noticed that's been going on since May, and technically it broke over here. And if the box pattern was to believe, then this, what usually happens is what was the distance or the height of the box gets covered over here as well, which is around 38 700 odd levels. Now market's already reached all times high. There are some resistance kicking in, but at the same time there's not enough selling pressure to kind of cover all these gaps. So our plan is to keep a watch, keep adjusting. We've got time because we're not playing for this week, so that we can get some decay, build some positions, and eventually end the week in profit.